The following is a presentation of TFNN. Now, the author of Mastering Probability, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the July 17th wonderful Wednesday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that is what it's all about. So let's go look at one of our tools. This is the tool I call We Can Become Bitter or Better as a result of our experiences. You know, true story, identical twin brothers attended their 20th high school class reunion. One brother was a successful writer and the other failed miserably at everything he had tried. The successful brother was asked what he perceived as the critical factor that helped him achieve success, and he quickly answered, why, of course, my parents. Oddly enough, the other brother blamed all of his misfortunes on his parents. You know, we have no idea whether the parents treated each child differently, and had jumped to a conclusion that they favored the successful child. In my opinion, that would be a bad assumption. What we do know is that one brother was prepared to move ahead and explore his experiences while the other brother was held back and wallowed in his negativity. You know, in 1848, another true story, in 1848, during an Irish uprising in which the captured were tried and convicted of treason against Her Majesty Queen Victoria, all were sentenced to death. But passionate protest pleas around the world persuaded the Queen to commute those sentences. These men, they were banished to Australia. And back in those days, back in those years, it was considered to be the Russian version of Siberia. In 1874, that happened in 1848. In 1874, the Queen learned that Sir Charles Duffy, who had been elected Prime Minister of Australia, was the same Charles Duffy who had been banished some 26 years earlier. She asked what had become of the other convicts and learned that Patrick Donahue became Brigadier General in the U.S. Army, Morris Lane became Attorney General of Australia, Thomas McGee became a Minister of Agriculture in Canada, Terence Meagher, he was elected the Governor of Montana, and on and on and on. You know, life will take twists and turns. That much we know. Life will take twists and turns. Life can sometimes throw us off course. However, the longer that we live, you and I, the more opportunity each of us has to right the ship, so to speak. Our living, your living, is determined not so much by what life brings to us as by the attitude that we bring to life. Not so much by what happens to you and I, more so with regard to the way that our mind looks at what just happened. Circumstances and situations, look, they absolutely do provide color in life. And given the mind that we choose, we can choose which colors those are. We can become bitter, but better off. We can become better as a result of our experiences. What happens to us, look, what happens to us on the journey of life is not nearly as important as how we handle what happens. Let's go check out and see what's happening in these markets here. We had Uncle Ben release his minutes before he sits down today. I think he sits down in an hour and a half or so. Maybe it's a half an hour. In any event, we've got the futures. They're up. They like Uncle Ben's wild rice out here. You've got the Dow futures up 30 points right now, trading out at 15,421. They are going to head up to their May 22nd high. The ES Mini, that's trading up 6 1/4 points at 1677. It also wants to go tag that May 22nd high out there. NASDAQ futures up about 9 at 30.79. Russell 2000 up. King dollar back just a bit. We've got gold up $4 right now. Silver up 9 pennies. Currency market, well, relatively flat with the exception of the pound. No longer getting pounded. We'll take a look at that currency pair. That's up over 100 ticks here right now. Our call number, 877-927. 6648. Give us a call. We can take a look at your stock or whatever it is that you'd like to take a look at. And most certainly if you're struggling with any kind of a technical indicator, A to B equals CD, whatever expansions, whatever they might be. Give me a call. We can take a look at those as well. Across the pond right now, we've got the DAX up 49 points, well off of its session lows earlier today. It's up about 0.6%. The FTSE up 0.5% as well, up 34 points over in Asia last night. Pretty much a flat bag out there with the exception of the Shanghai. Shanghai was down 1% off 21 points. Otherwise, the Hang Seng was up 59 points. Not a big deal there. The Nikkei basically flat, up 15 points as well. Let's begin our morning by taking a look at a little bit of the larger term picture out here. By larger, I mean we're just simply going to take a look at the daily charts. Let's look at the Dow futures specifically. Dow futures here right now trading out at 15,418. You know, they completed a couple days ago the 1-to-1 A to B equals CD. I'm sorry, the 1-to-1.272 A to B equals CD. But they still want to get up and tag at least the high of 15,523 or at 15,419. That means it's a 100-point move. Will that happen today? Don't know. But it still looks like that's what wants to happen. You've had the bears they showed up yesterday in the marketplace. They most certainly did, but we'll see if they are flanked by more than just a one day out there, if it was really more of a pause button. A lot can happen in one trading day. What's going to be key inside the Dow, whether it's the futures, whether it's the index, is going to be tagging that actual high out there, 15,523 inside the futures marketplace. That's on May 22nd. If we go take a look at the ES Mini now, see where it is traveling at. It's traveling at 1677. Had a little bit of a bearish engulfing candle yesterday as it was approaching the resistance level of that May 22nd swing point out there. The number for us to watch is 1685.75. That is on the ES Mini. And so long as, quite frankly, today, as long as it closes above 1670, this is the ES Mini we're talking about, then yesterday's bearish engulfing becomes very, very, very suspect. But the market most certainly getting a little bit tired. We saw that here on the trading session of July 12th. But the candle here from July 15th, not too shabby. Yesterday, we saw the bears try to take control of the marketplace. And this morning here, we got a lot of time left in trading, but so far so good for the bulls, and so far so good, quite frankly, because we want to see that May 22nd high get tagged. Now, it could be a close over it. You close over it, and then the Dow and the S&P, well, they will join the Russell 2000 as well as the NQ as well as the NASDAQ futures out here. If we take a look at these are traveling above the May 22nd high, and they want to head all the way up to about 3105 to 3117. At 3117, they will form a 1.272 butterfly sell pattern out there. Slightly bearish candle yesterday, but nothing to be too concerned about. If I take a look at, let's just see how overbought the market is right now. Let me just put that on the, so, it's reaching the overbought territory. You don't want to jump on board here. You would like to wait for some type of pullback. Now, the key here inside the NASDAQ as well as the Russell is going to be after they complete their patterns, after all these markets, they complete their patterns and they go ahead and they pull back a bit. It's going to be what happens inside the NASDAQ futures. Is it going to get back inside the May 22nd swing point, or is it just going to get down there and test that level? It's gotten over it on lighter volume, no question about that, but that also means we've seen a change in trend, a change in polarity, and that level could now act as support. That's a level of 3,053. We take a quick peek here at the Russell 2000. That actually is setting up to potentially form a nice three drive to a top pattern. That'll take us right into about the 1052 range. Right now you're trading at 1042. The timing on this, though, is a bit early. We take a look at, what you like to have in a three drive to a top or three drive to a bottom pattern. You like to have equal time. And by equal time, and when we take a look at the first drive, we'd be going from the swing point of March 15th, from that price level of 951, all the way to the high of May 22nd out there. That's 10,008. And if you take a look at that, was a total of 46 days, 46 trading bars out there. 46 more trading bars would take us to July 29th to complete that pattern. But price-wise, with it only being 10 points away, with these markets here wanting to tag their swing point highs out there, looks like this pattern here may complete just a bit early out here because it's only July 17th. But we'll see. It could just be a market that moves somewhat sideways and gradually crawls up to the top. But that is a nice three drive to a top pattern completing right around the 1052 level. Let's go to John in Boston. John, thanks for calling. Thanks for holding. How are you this morning?
Hi, Steve. I'm doing well. I hope your surgery went well.
It did. Not too bad. I have a few less chiclets in my mouth at the moment, but we're going to get those replaced. Thanks for asking.
Okay.
You wanted to look at gold?
Yeah, I was different. I was how you would compare GLD with IAU.
Well, really the same thing. The difference is the IAU is traded at 1/10 the price of gold, or approximately 1/10 the price of gold, whereas the GLD, is what is that? That is 10% of the price of gold out here. So if we take a look, are you long either of those?
No, I was trying to I get your letter, and
okay.
I know that what you mentioned, and I was trying to make up my mind to go with, with what you mentioned or the alternate one.
Yeah, either one. In the newsletter, the reason that we had taken a position in the gold a while back. I believe that there's a significant bottom out here, and I just simply chose the IAU, just simply from a price standpoint. But either one, quite frankly, is going to work for you. I think that we have seen a significant bottom inside gold. The great news about gold at this stage, John, is this, and that is that the move that we've seen off of the bottom so far, we haven't seen the short covering rally take place yet. When that does take place, and it will kick in at some point in time, I suspect it's not going to be until we see the gold get into that April 15th level, April 16th area out there. But either one is really a good trade.
Okay, thank you very much, Steve.
You bet. You have a great morning. Folks, we'll be right back. Dow Futures up about 28. You, too, can get in on the action. Give us a call at 877-927-6648. We'll be right back.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. And, you know, I've got on my chart here. If you're watching us on Tiger TV, you can see my charts. If you're listening on the radio or your mobile device at TFNN.mobi, thank you so much for doing that. Remember, you can always catch the live stream of the show on your smartphone-type device just simply by going to the homepage of TFNN.com. Over on the right-hand side, you'll see a small button there with 3 smartphones. Click on that. This show will stream live. You can always catch the archive on Channel 9 as well. That way you can take a look at the charts. And going back to the question that John had in Boston, and John, thanks so much for subscribing to the newsletter service. I've got the GLD, which is over on the left-hand side of my chart, and the IAU. Both are ETFs that are tracking gold. You can see one is at 1/100th, the other is at 1/10th of the price of gold out there. The GLD right now closing out yesterday at 124.89, and the IAU at $12.55. Now, that doesn't mean that you go ahead and back up the truck here. You still use the proper reward to risk management and the risk management out here because, look, we never can control the markets. All that we can control is our risk. And you should always take whatever your free trading capital is and take 1% of that. You shouldn't risk. You don't need to risk more than 1% on any one trade. And in this case here, let's assume that it's we'll start with $10,000. That says that 1% of that would be $100. And that's all that you're risking. And what that means is that you're taking that amount of risk, that $100, and you're dividing that by your stop, whatever that might be. And that's going to determine the number of shares that you're going to purchase. So in this case here, if we take a look at the IAU and it's trading at $12.55 right now, I most certainly would have my stop underneath $11.52. So we're going to use $1 right now. In the case of the IAU, if you were to buy it right now, you would purchase 100 shares because we'd take if you had $10,000 in capital and you wanted to risk 1%. Why? Because you take $10,000 times 1%, that would be your $100 divided by your stop that you're going to use, and the stop would be $1 stop on the trade. 100 divided by $1 gives you 100 shares. And so that's how and you're going to have more. Obviously, 100 shares is going to be 100 shares times $12.55. What's that going to be? $1,255 so you're going to be tying up more than 1% of your capital inside a trade out there. But the risk is the only thing that we control out here inside the GLD, inside the IAU. Price could certainly come back and still test that June 28th level out here. Both of these ETFs, they've completed, A to B equals CD patterns if you just come off of the low out here on June 28th. Oops, I didn't mean to do that necessarily. Let me pull this back here for a moment. Oh, I've got my mouse here is going a little crazy. And if we go ahead and we take a look at it, we come off of the low here on June 28th, all the way up to the high, really on the next trading session on July 1st. And the pullback was at candle session on July 5th. And what you can see at 1266, you actually hit an intraday high yesterday of 1259. That completes your 1 to 1.272. That doesn't mean that the move is over by any extent, but you certainly could get some types of retracements here. But in this case, when it comes to gold, when it comes to silver, a lot of non-believers out there. That means there's going to be time to get in on the equities, get in on the actual metals itself. And folks, if you'd like to see the different holdings that we have inside of my newsletter service, there's a number of those that we actually own right now: gold and gold equities, silver as well. And we also have some that are on the watch list. So now would be a great time to go over to the homepage at TFNN.com. You can test drive Mastering Probability, 30-day unconditional money-back guarantee. Lot of folks out with earnings here today. We are really getting into earnings season. If we take a peek here and see what is moving the most here this morning, because we've got a lot to choose from. Let's see, you've got CSX Corp, that's up a couple percent right now. You've got Interactive Brokers there, down a couple percent. Packaging Corp, PKG, that's up 4% here right now. That's up about $2 and change. United Rentals, that's up about 4%. Yahoo, that's up about 3%, up 76 cents. If we take a look at, out this morning, most of those were out last night. You got Mattel. Mattel was out with earnings here this morning. They're trading down about $3.55 right now. That's almost 8% to the downside. Piper Jaffray, that's off about 5%. They're trading down $1.50. St. Jude Medical, that's up 3% here this morning. Let's see. So if we take a look at let's take a look at Yahoo, see what it is doing out here. I don't even know if I've got Yahoo up on my screen. Let's just grab one that I do have. Let's take a look at Mattel here, because that is trading down here this morning. Let's go see real quickly where that might be trading into. MAT is the ticker symbol. That is trading out right now at 42.76. 42.76 is, well, it's going to pull back into the swing points here most recently from June 24th, and the top of that is 44.17. So it looks like maybe that's the area where Mattel, MAT, is going to target here first this morning. 877-927-6648. When we get back, folks, we'll go see how these markets are going to pop, or whether they're going to continue north. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position, for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow up 31 points. S&P up 6, trading at 1681. Composite up 9 points at 3608. Russell 2000 up 3.5 points at 1042. Google up $5. Apple down $1. Microsoft up 3 ticks. Intel up 14. Cisco up a penny. Leading the charge to the upside here, we got Azimil Holdings, ASML. They had earnings either before or after the bell. They're up 3% right now, up $2.88. United Rentals, just nosed them out, up $2.95. That's up 5%. Also out with numbers, St. Jude Medical, they're up $1.86. Rheology Holdings, RLGY, up 3.5% this morning. Packaging Corp, PKG, they're up $1.70. So all these entities that were out with earnings here this morning are the ones that are leading in the clubhouse. We got Celgene, that's up $1.73. X1, the 3D software company out there, they're up $1.30, up 2% here this morning. Bank of New York Mellon, they were out with numbers. They're up 3.5%. Yahoo up $1. To the downside, we've got Mattel. They're leading the charge to the downside, off $3. American Express, a couple of the credit card companies getting hit yesterday. American Express down 3.5% here right now. Northern Trail, the NTRS, it's a ticker symbol. They're off down 280. Apple off $1.30. Nothing huge. You got McDonald's off $1 right now. Broadcom off 91 cents. Zag off 14%. Maybe we'll take a look at that. That is getting hit hard. Our call number 877-927-6648. Let's take a look at the currency market first. Here we got the pound. The pound came back and formed that beautiful Gartley sell pattern. About as good as you can get as a pattern that had completed on June 17th. Why do I say that? Well, you had a nice 0.618 retracement coming off of the swing point high out here on January 2nd, all the way down to the low that was put in, the hammer low on March the 12th, and the high that was put in here on June 17th, that was your 0.618 retracement. That also happened to be a 1.272 expansion of your swing points from May 1st, the May 1st high, all the way down to the low on May 29th. So you got a couple of nice Fibonacci numbers coming together at the same point. You then had a couple of bearish reversal signals out here, and this thing made a move down. It made, normally you'd see a 0.618 as your normal stopping area. Well, this thing went all the way down and tested the swing point. The hammer low made a 100% move of a move, tested the hammer from March 13th out there. That area held. That says that's strong support. That's at the level of 1.4892. Also, while that was occurring, we saw that price got into the oversold condition, utilizing our relative strength indicator out here. It's cool how this indicator works on all time frames, works on all instruments, currencies, doesn't really matter. You know that you want to start looking at buying something. When it's down towards the lows, you want to look at being able to sell something as that RSI is up towards its highs. What I mean by highs and lows, I mean the 70 and the 30-ish line out there. Now, you got to put all that together with bullish and bearish candles and other candlesticks, other patterns that are out there. Right now, though, you can see here that bouncing out of that oversold territory, doing it with a nice big bullish engulfing candle. Let me get rid of the actual pattern here that's setting up in the 155 level. Let me get rid of that, clear this up on the screen here. So you got a nice big bullish engulfing candle. As price was coming into that hammer all the way back on the left-hand side, that was your bullish reversal signal, or the message was to tighten up your stops for sure. Then you got follow-through with a wide-ranging bar there on July 11th. Now, if you just take a look at that last leg down, coming off of the swing point from June 17th all the way down to the low from July 9th out there, what we can see is price cutting into that 0.382 retracement with a wide-ranging bar here on July 11th. Now, the body of a candle is the essence of price. You need to be paying attention to the bodies of the candles. Look, the wicks, no doubt, they're the extreme emotions, the extreme high and the extreme low out here. And when you see price travel with inside the body of a candle out here, in this case here on a bounce at July 11th, we took a look at 3 trading sessions here where it traveled with inside that body. And today, what has it done? You are now over that body. That is a continuation move. Folks, most candlesticks are reversal signals. There are some called the rising 3, the falling 3. They are continuation patterns. Now, the day's not over, but the signal this is giving us is that the pound, the Great British Pound, is on its way up to the 1.539 level. That is your 0.618 retracement. Does it have to stop there? No. It doesn't even have to get there. No. But that's right now what the signal is that is coming into the market. I suspect that's where it wants to go, or 155. 1.55. I think that is more likely where it really wants to go. Why is that? A couple of different factors. Number one, if we take a look at the A to B equals CD pattern, your A point is going to be your July 9th low, your B point is going to be that July 11th high, and your C point is going to be right down here, that little doji candle on July 15th. That retracement, only about a 0.382 retracement. That says to me this wants to do more than a 1-to-1 A to B equals CD, more likely a 1 to 1.272, and then the pattern that finally completes there, and you can do this with your system as well. Even if you don't have these drawing tools out here, all you need to do is just simply measure expansions and contractions of swing points out here. You've got a 0.786 retracement, and you've got a 2.618 expansion of your B to C swing point, and a 1 to 1.272 A to B equals CD. That is that, folks, is how you want to put those leading indicators. That's the cool thing about an A to B equals CD. It's the cool thing about retracements, because you can do all your work ahead of time, and you can lay out where is it that you believe the market is going to go to, and where is it that you would want to put on a trade? For me, I would want to go ahead and put on a short trade right in that 155 area. Now, you want to continue to assess things one day at a time. Why would I want to put on a short trade there? Well, just take a look at this trend here. Take a look at this big leg. It's very possible that what we are setting up here inside the Great British Pound is a huge A to B equals CD on the way down. Price stopped where it should. Price stopped where it should because of the hammer candle. Price stopped where it should on the way down because of getting into that oversold condition. Now all it's doing is just working its way off in just a normal EKG of the market. This is the daily chart that we're looking at inside the Great British Pound. Let's go to Tom in Plymouth, Massachusetts. Tom, thanks for calling. Thanks for holding. How are you this morning?
I'm doing great, Steve. How about yourself?
Excellent. Thanks so much for asking. You wanted to take a look at Nugget, I believe. Is that correct?
Yes, it is.
And NUGT, that is that the 300% of the gold miners or gold? Which one is that? Do you know?
The gold trust, I guess, or
the gold trust. Okay, so you got NUGT. It's trading out at 667 right now. Tell me what you're doing and how I can help you.
Well, this morning I get out of half of my position because I get in at 503.
Okay,
but I'm looking to see where that could possibly get up to.
So we're taking a look at the at NUGT. That is the Direction Daily Gold Miners Bull. So that's I believe that's a 300% ETF out here. Now, where could this go to? A number of different spots. Now, it's traded at $6.68 right now. It could easily go to $39. So that's one of your spots. Now, I guess the question is, what's your time frame, your outlook time frame from a trading standpoint?
Very quick, day or two. I don't trust it at all.
Okay. So if you're trading, very quick, that to me that would mean you wouldn't want to really pay attention too much to the daily charts out here, and you'd probably want to go to something more shorter term, and maybe that's just a 30-minute chart, which I put on my screen. I'm going to just go ahead and erase everything and just start over here. But your question is where will this go to, or where to get back in? Because you sold part of your position or all of your position?
I sold half of it, yeah.
Okay.
I was looking to, if it went down this morning, I was going to buy some more. If it went up, I was going to get rid of half of it and then kind of watch it for the day and see where it brings us.
I think the good news here when it comes to the miners out there, when it comes to gold and silver, is there's going to be a number of buying opportunities out here. So that's why I was asking what your time frame is, because we're at a place where we could be seeing a significant bottom. And so the question I would pose to you, with that being the case, should you also consider maybe taking a little bit longer term approach? Maybe it's not with Nugget, but maybe it's with another gold or silver equity. Maybe it's with something else. In the case of the NUG, go ahead.
Yeah, some of the miners I've been. Get subscribed to your letter there, and I've been watching those. They look like they're starting to move up a little too.
Yeah, what's nice, Tom, and thanks for subscribing to the newsletter. What's nice is that we're seeing signs of strength off of the bottom out here. So, but because there's not everybody's bought into this concept that we could be making a bottom out here. That's what's going to give a number of opportunities, a number of buying and selling opportunities out here. So right now you've got the NUGT. It's coming up to the gap. So if I were to just simply pay attention to normal technical analysis, I would say that the price level of about $7 is where you're going to get your next piece of information. That's the gap from 10 o'clock in the morning on June 20th. And the volume out there, and I'm looking at a 30-minute chart, was 4.8 million shares. Now, all the volume came in yesterday at the close, which was 4.6 million shares. That's a good sign. But, of course, part of it is also just simply getting even with all of the buying that needed to be done, because we saw so many of the equities moving up in price yesterday. So, the ETFs were out there just doing their end-of-day housekeeping and bookkeeping out here. So if you're looking for another spot to possibly enter into this, the question's going to be whether or not these pullbacks are going to be just really light pullbacks, meaning maybe like 0.382 retracement levels out here. But I would say, let the market stop you out of your secondary position that you've got inside that, or leave that maybe as a core position for a while, because I really do believe that we'll see the Nugget or all of these ETX, the GDX, the XAU, they're on their way up. They're definitely on their way up, and in my opinion, you want to start taking a look at building a nice little portfolio with some of the better performers out there. Does that help you, or are you looking for a more specific answer here?
No, I think that's good. I think patience, I guess, will just see where we're at and just let it drift a little bit.
Yeah, there's a couple, as you know, we have a number of equities, gold, silver equities that we have as holdings inside the newsletter, and there's a couple that I pointed out over the weekend because of high volume bars that are untested that we want to be in, and I expected a little bit of a pullback. And, boy, we didn't get that yesterday at all. We really didn't get that much on Monday. So that's why I'm really assessing, okay, where's the next spot where we really should take a position. And that's going to be for me, watching today how it trades and the volume and so forth. But, you're in the right spot, that's for sure.
Thank you so much for your advice.
Hey, you bet. Thanks so much for calling. Good to hear from you. Give us a call again. Right now, folks, we've got the Dow's up 30, and we were taking a look. So we spent a bunch of time here on gold. Gold this morning here. If we take a look at silver, let's just go see what silver is doing. Only up about 10 cents right now. So Not a ton of movement. These bars don't get you all happy or anything out here, these small-bodied bars. But, again, what silver does want to do once you get up and test the bottom of April 17th, April 16th out there, right in that $22 range. If we take a look at light sweet crude, let's just stay in the commodity sector here for a moment. Light sweet crude, it still wants 114, has not really backed off much whatsoever. Out here, you're looking at the rising price channel, but that line here doesn't, to me at this stage, doesn't mean a ton to me. What means more to me is the horizontal area that it broke out of, that 1-year horizontal band, that trading range that it was in. It broke out, and it says that we're looking at $114 oil at some point in time here as the next move up. Maybe at 114, then it becomes a nice shorting opportunity. We take a look at bonds here, see what's going on with bonds in the marketplace here. Bonds right now starting to get to an area where you could see a decent bounce truly unfold. We talked about, or I spoke about, the body of a candle and the importance of a body of a candle. And right now, if we take a look at the bond, the 30-year Treasury out here, we're looking at the day of July 5th. And the open was 132.04. You're trading just above. Was that the open? Yeah, 132.04. You're trading above that right now at 135.24. It's finally breaking through that area. With it breaking through that area and also breaking a trend line. That's the trend line coming off of the swing point high here from the top of May 1st. That high, 149.21. So I'm just using a trend line out here. What we can see here is that bonds really broke that trend line. It's a close call whether they actually broke it yesterday or they're clearly breaking it here this morning. That says that we should see a move up to about 138.25, assuming that what we see is a close today above the body of that candle. Now, a normal bounce in a marketplace is not to the 0.382 level. That 0.382 level is one that we expect. That's the minimum objective. And if we start to see the market turn back from there, now you would expect it to turn back because that's where people get off of an elevator. But by turning back, I mean where you'd all of a sudden start to see wide-ranging bars or volume off to the bottom. That says, boy, the trend that was in place is a significant trend, and that means a larger A to B equals C to move down. But what bonds should do, if this is breaking out here, that should say bonds want to make a move up to the 142.3 level. Of course, now what you're saying is, well, Steve, how is it that the S&P can go test its May 22nd high and bonds can move higher? You got to trade each chart, each pattern, just simply one thing at a time. It's nice to have correlations out there, but there are times when the correlations just simply come unglued. Just trade each chart separately. 877-927-6648. We got the Dow up 17, S&P up 4. We'll be right back, folks.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long
long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Kind of a flattish market at the moment. The Dow being up 6, the S&P up 3, NASDAQ being up 6. But, what we have here is we've got the New York Stock Exchange. That's a leader in the clubhouse. That's up 0.3% right now. That's the leader. That's the lead dog, up 28 points right now. What is that telling us? Well, you've got net advancing issues, 996 as we speak. Kind of a toss-up because you've got, not a toss-up. You've got the net advancing issues, so you've got some decent, wide market breadth out there. In fact, in order for the bears to actually take control of this market, there were a number of bearish reversal signals yesterday. What we would need to see is 1,907 or more net declining issues in the New York Stock Exchange. We've got 992 to the upside. So even though the market is a little flat here, when we take a look at the larger swath, the wider breadth of the marketplace, it's actually telling us it's got a little bit of underlying strength out there. If we go take a look at the EKG of the market, the ES Mini, the 30-minute chart out here, what we can see is as we were coming into the 9:30 session out here, the open inside the futures contract, it had moved up into a level of 1678. Now, what was hanging out at 1678? Well, you got the bears are hanging out right here. You can see them. They can't hide. They have to show themselves. Last time up here was back at 10 o'clock in the morning yesterday as it got up to 1679.50. Got a bearish engulfing candle out there, and so that becomes an area of resistance. If we draw a line across the screen out here, we'll put that in black. You can see that line right there. That's your resistance line. That's where the battle is going on right now between the bulls and the bears. If the bulls overtake that line, meaning get above 1679, then this line here should become a support. And what that sets up the move higher to go test that May 22nd high. Bullish or bearish, no matter what you're leaning towards in the marketplace here, you want to go see that level get tested. You want to see, if you're bullish, you want to see not only get tested, you want to see it close above it. And if you're bearish or you're looking to be bearish, you want to see it tag that area, close back below it, fail on both price and volume. and as well see all of the other indexes set up some patterns. So what we have going on in the marketplace with regard to the move higher and then all of a sudden pulling back, and depending on what type of a trader you are, what time frame, what you really want to do is you want to understand what's really going on in the market. And it's really nothing more than a normal move. You would expect price to advance up to an area of resistance. It's like playing a football game. This becomes our football field out here. It's the strategy, or it's like playing, or it's like, managing men in a war out here. And in this case here, we know where the lines of resistance are. Once you break through it, those lines simply become yours. You control them, and they become your support areas. So the market really doing what it should normally do out here. So we took a look at bonds out there. Let's take a quick. How about that? Let's take a quick look in here at natural gas. I see a number of emails flying across here this morning. Some folks wanting me to take a look at things such as YCS. That's the ProShares Ultra Short for the yen, and Society. I can't really. The ticker symbol is SQM. So during the next show, during the Money Masters show, I'll go ahead and take a look at those, because I only have really about 45 seconds or so to do that. So during the Money Masters show, for those of you that sent me an email, I'll go ahead and take a look at those for you. If we take a quick peek here at natural gas, not really doing a whole lot, just hovering around, trying to really get down and move down to about the 340 level. That'll be the 0.786 retracement of a significant low and high out there going back to February 15th as the low, and the high coming in on April the 30th. So stay tuned for the Money Masters show, folks, and I want you to remember this. Always remember, you have an amazing power within yourself, and that power, it's so strong, it'll create a life of abundance. It'll cure incurable diseases. It'll build billion-dollar businesses, paint magnificent masterpieces, but most of all, folks, and I do mean most of all, it'll create fantastic, loving families. Thanks so much for being a part of the TFNN family. If you're off to start your Wednesday, have a great day, and I look forward to seeing you soon. Take care, folks. Nowhere, spelled N-O-W-H-E-R-E. At one point, we've all been there, whether it be our health, career, or our finances. Some might be there right now. So where are you when it comes to your trading and investing? Better yet, where would you like to be? The good news, I can take you from nowhere to now, here, right now. Same letters, N-O-W-H-E-R-E, just a totally different emphasis and focus. Hi, I'm Steve Rhodes with TFNN, and on July 25th at 6:30 p.m., I'm going to share with you a trading strategy that I began on May 10th when the S&P was at 1627 and closed at the same price 8 weeks later. That's right, the S&P went nowhere versus a trading strategy that produced a 100% hypothetical return in that same period of time, and it's now here for you. Subscribers to my daily newsletter service, Mastering Probability, have free access to this exciting live workshop. The trend is your friend. All the details are on the homepage of TFNN.com. Decisions shape your destiny, and your trading destiny is now here for you.